Time for today's three-stock lunch, and we're taking a look at some movers here. Allstate down 7% today, anticipating and pre-announcing, in fact, a fourth quarter net loss of nearly $400 million. Sunrun leading the solar decline, down nearly 10% today. And Comerica shares up 6%, beating earnings estimates for the fourth quarter. Let's bring in Victoria Green. She's CIO of G Squared Private Wealth and a CNBC contributor. Boy, we don't see moves like this in insurance very often, but it was Travelers before. Now Allstate down almost 7% on the day. What do you make of it?
They just weren't ready for the mayhem that was Winter Storm Elliott. You know, that's their slogan, and they weren't prepared for mayhem that happened. It was a surprising swing to losses. They also are struggling with their auto loan underwriting. They cannot make that profitable. They're going to try. They've gone back to hike rates again, but they're behind the curve. Auto loan underwriting was bad. They had like $777 million in catastrophe losses, well above what was expected. They just weren't ready for it, and they need their auto loans to perform better. I think they're in a downside right now, and it's not a buy for me. I think you need to stay clear for now.
I will also point out they've gone to the state regulators. They've asked for rate changes. And on average, it's 11%. Wells Fargo's analyst says that's not enough. And their claim severity and frequency is still very high.
How'd they get it so wrong? How'd they get it so wrong?
I think they were just mispricing it, and I think their underwriting needs to relook at their algorithms and how they're doing it and figure out how they're mispricing these loans so badly. They have states they're well over 100% in what they're losing, and they need to reprice. They need to do it aggressively. 11% wasn't enough, but you also have this kind of double-edged sword that they may end up having to lose customers if they hike too aggressively and somebody else can swoop in. So it's kind of a lose-lose for them, and it's surprising analysts how poorly auto loans are going.
Just to pile on them, just for the record, I'm tired of the mayhem ads. Let's move on to Sunrun, shall we? What do you think there?
It's not a buy for me right now. I think they're fighting rising rates, rising costs. You know, if you look at what they were getting on their advance, it's now 75, 85%. It used to be 95, 100% on their advances. And they're just struggling with the rising rates, rising cost of capital, as well as it's not just Sunrun under pressure today. It's all of solar. It's very difficult to sell expensive solar if we're looking at a recession and people are starting to pinch pennies and not looking to make a major change to their home. They're very, very exposed, almost 100% residential solar. And so I think they just may struggle to keep up the sales, as well as they're seeing these rising costs of capital bite into their margins. So they're kind of lose-lose on both ends. If they see a slowdown in sales, they also may struggle to cross-sell. They want to sell their batteries and inverters and really kind of get the whole home solar going. And I think that's difficult in a recessionary environment when the consumer is squeezed. And with the rates going higher and with what Bernard said today, I think people are looking at the solar sector, specifically Sunrun with its residential exposure, and saying, not right now. I think you could see this retest down to the 19.5, 20 level. I think it's just hard for them to make money in a rising rate environment.
All right, our final name today is Comerica. We got a beat on earnings here, which really stands out among the banks.
Yeah, it was fantastic. Their net interest income actually outpaced their costs. They were one of the only financials. That's why you're seeing the nice rise today in the stock price. I think the stock has finally bottomed out. I think it's got room to run. You know, it's down about 36% over the year. If you look at it, we could see it retesting kind of the 75, 77 level. Their net interest income is expected to grow 17 to 20%. They've done a good job also increasing revenues from other fees. So it's not just the interest income. And they've got a quality portfolio. Their loan loss provision, yes, it climbed slightly, but that's, I think, them being prudent. They only have less than 0.5% of loan losses, and they're trading at an 8.3 PE with a 3.86 dividend. It is a solid quality stock, and it's executing very well. And it should stand out that while other financials struggled and saw that their profit got eaten into by rising costs, Comerica managed their rising costs very, very well as expanding their loans and minimizing the loss of deposits.
Victoria Green, good to talk to you. Thank you for your insight.